Most people invest in the S&P 500 as a lazy way to get good returns. But what if you could do better? There are a lot of ETFs out there that have been outperforming the S&P 500, and here are my top 3 focusing on long-term growth and value. As always, this is just my opinion and not financial advice. The first ETF is VGT, or Vanguard Information Technology ETF. Now, this one tracks the US IT sector with key holdings like Apple, Microsoft, and Nvidia. And in the last 20 years, it has destroyed the S&P 500 in terms of returns, almost doubling it, 13.72% compared to 8.4%. However, it is more volatile since it's a pure technology play. So it pays off very well during a boom market and will drop quite a bit during a recession. So please do your own research. The fee for this fund is on the lower end of around 0.09%. The second ETF is SMH, or VanEck Semiconductor ETF. This ETF gives you exposure to the semiconductor industry, one of the fastest growing and most important sectors in the global economy right now. This ETF is a basket of leading chip makers and semiconductor related companies, the backbone of the AI industry, such as Nvidia, TSM, and Intel. This ETF is one of my favorite because it is a targeted ETF for me to use in the last few years of the bull market. In the last 14 years, it's outperformed the S&P 500 by 2 times. Its return is 25.60% annually in the last 14 years, compared to 13% from the S&P 500. Similarly to the first ETF, this one has a much higher risk to reward ratio compared to the S&P 500. The fee for this fund is on the higher end of 0.35%. The third ETF is RSP, or Invesco S&P 500 Equal Weight ETF. This ETF rebalances equally across the S&P 500, avoiding concentration on a few big companies. It has a more balanced sector allocation towards more industrials, financials, IT, and healthcare. Some of their holdings are Oracle, Coinbase, and Nike. Now, this ETF has delivered steadier returns and outperformed the S&P 500 in some periods, especially during tech drawdowns. In the last 20 years, it has returned 11.43% annually compared to 8.4% from the S&P 500. Therefore, it's a pretty good hedge when the market goes down a bit. The management fee for this fund is 0.20%. Well, there you have it. Do let me know what's your fund of choice in the comment section down below. And if you want to see further insights about stocks and the market, make sure you follow my channel.